Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities continued the positive momentum driven by a higher than expected Fed rate cut and expectations of sustained easing over the coming years. The US Fed Chair Powell's post-policy commentary and the Fed's dot plot, which indicated a more measured pace of rate easing over the coming years, led to unwinding of expectations, driving the USD and US bond yields higher. Additionally, lower weekly jobless claims data supported the market's expectation of a soft landing scenario of the US economy, boosting risk sentiments further. In the US, the S&P 500, Dow Jones Industrial Average, and the Nasdaq Composite rose around 1.4% to 1.6% over the week. Asian equities trended higher on improved risk appetite for EM equities led by Hong Kong, China, which gained around 5% each, and Philippines gaining 4%, while most other markets gained around 1 to 2%. Back home, Indian equities continued the gain for the second consecutive week. The Nifty index scaled new all-time highs, up 1.7% over the past week, driven by positive global sentiments, news of India's weightage increase in a major global index, and a sharp surge in foreign investor inflows into domestic equity. Broader markets underperformed the Nifty index, with the Nifty Mid-Cap Index up 0.3%, while the Nifty Small-Cap Index was down 0.9%. Among sectors, realty and banks were the best performers with gains of over 3.5% for the week, while telecom and IT led the losers with cuts of over 2.7% over the past week. The Indian fixed income market had another decent week, with Indian government bond yields falling across the curve following a US Fed rate cut, even as US bond yields edged higher after the Fed's dot plot showed a more measured pace of rate cuts going forward. The yield curve flattened as the 10-year Indian government bond yield fell 3 basis points to close at 6.76%, while the 3-year and 5-year Indian government bond yields fell 1 basis point and 2 basis points respectively. The INR rose 0.4% against the USD over the past week to close at 83.58 per dollar amid improving risk appetite for EM FX and strong gains in domestic equities boosted by foreign investor inflows. The INR gold rose 1.2%. Brent crude oil rose 4% over the week to close at $74.5 per barrel amid rising Middle East tensions. Reports of US refineries planning their slightest maintenance in 3 years, potentially boosting oil demand in the coming months, and the US Fed policy easing and lower weekly jobless claims supporting a soft landing scenario of the US economy. Coming to macro updates for the week, the first was on India's trade deficit, which widened to USD 29.7 billion in the month of August 2024, the highest recording in 10 months and above the USD 23.5 billion deficit recorded in the previous months. Imports increased 3.3% year-on-year to 64.4 billion USD, mainly driven by higher coal imports, which rose 10.1 billion in the month of August from 3.1 billion recorded in the previous month on the back of reduction in import tariff announced in the union budget. Non-oil, non-gold imports increased by USD 2.8 billion, driven by an increase in machinery items and transport equipments. Exports fell 9.3% year-on-year to USD 34.7 billion on the back of a sharp contraction in oil exports, while non-oil export growth remained flat. The second data was on India's wholesale price inflation, which grew by 1.3% year-on-year in the month of August 2024, easing from a 2.04% gain recorded in the previous month and below forecast of a 1.8% rise. Primary articles and food index rose at a softer pace due to a slump in vegetable prices. Meanwhile, manufacturing prices advanced at a softer pace, marking the lowest since the month of May due to softer rises in pharmaceuticals and medical chemicals and wood products. On the other hand, fuel and power prices fell for the first time in 5 months, dragged down by the prices of petrol and high-speed diesel. On a monthly basis though, wholesale prices fell 0.45%, reversing from a downwardly revised 0.78% growth in the month of July. That's it in this edition. Thank you as always for listening. If you enjoyed the podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.